Now you've got people like, I mean, I was on vacation for a couple weeks and I was totally away and off the grid, but I did sneak a couple um, little things to listen to, and one of them was Larry Fink, right, head of the largest asset manager in the world, basically saying that Bitcoin was a good place to protect your assets from devaluation in the currency. I mean, literally, like your head explodes when one of the most powerful people in our business go ahead and says, this is a big deal.
BlackRock's application for a spot Bitcoin exchange-traded fund has officially entered the Securities and Exchange Commission's docket as part of the proposed rule change process. This development, recorded late Thursday, represents a significant advancement for the highly anticipated Bitcoin-related proposal before the SEC. The application for the iShares Bitcoin Trust was submitted about a month ago, generating optimism throughout the crypto market. Following BlackRock's move, other prominent players, including Invesco, WisdomTree, Bitwise, and Fidelity, have also filed for spot Bitcoin ETFs with the SEC. Previously, the SEC signaled that BlackRock's initial application lacked certain elements. In response, the company submitted a revised application, including a surveillance sharing clause that would involve Coinbase, a crypto exchange, monitoring and reporting potential illegal activity. Soon after, Valkyrie, Fragility, and ARK Invest updated their applications with the same provision. In a related video, Mark Yusko discusses the crypto summer and recent developments in the crypto space. He shares his views on the Bitcoin ETF and boldly proclaims that BlackRock will likely be the first to receive approval for the Bitcoin ETF, while explaining his reasons for this belief.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
And Charlie Munger one-upped him and said, trading in Bitcoin is like trading in newly harvested dead baby brains.
Yeah.
I'm like, Charlie, seriously, dude? And Jamie Dimon, it's a fraud. And yet he's got a whole team building, JP Morgan coin. Why? Why do they say this? Well, two reasons. One, you can judge the quality of the idea by the quality of its detractors. If people, you and I, and people who are listening to this don't really care about or know about, don't like an idea, who cares, right? Probably not a very good idea. If people that we respect and admire and actually look up to dislike an idea, it's a really good freaking idea. And so that's the first thing. The second thing is, and I'll misquote this, but the capacity for someone to understand something and believe in it is inversely proportional to how much their paycheck is dependent on them not believing it and accepting it. And so if you're the largest asset manager in the world and or the largest bank in the world, and along comes this technology, back to my socks, and look, there's a reason the first image on the Bitcoin blockchain is the London Times chancellor on the verge of the second bailout for banks. That's not an accident, right? It's not an accident that January 3rd, 2009, thank you.
Yeah.
January 3rd, 2009, that's not an accident, right? It's not like it was invented that morning. Satoshi woke up and finished typing. And no, there was a reason that this was all released in the middle of the global financial crisis and the banking crisis. It's because this technology makes the 800-year run of the trust industry superfluous, right? We went from a system where we needed trust. And I use the very simple example, and people are tired of hearing it, but it makes sense. Like if I lent you money, I wrote down in my ledger originally that, Jack owes me $100 and you come back to pay me back. I'm an unscrupulous guy. I've changed the number to 200. And you're like, no, I only owe you 100. And but Jack, this is the ledger, one ledger. So the Medicis came along and said, no, there should be two ledgers. Jack, you keep a ledger. Mark, you keep a ledger. But here's the problem. I'm an unscrupulous guy. And the Medicis, they're inventive. So I say to them, I'm going to change my number to 200 and I'll give you half. So you come back to pay me the 100. I say, no, you owe me 200. And you're like, but Medicis. And they're like, Jack, you must have written down the wrong number. It just looks like you wrote down the wrong number. It was totally corruptible, that system. And we know the system's corruptible the banks, the global banks, have paid fines equal to an amount larger than the market cap of Bitcoin.
And
Just
those
doesn't sink
fines
in.
probably,
That's not the malfeasance. The malfeasance is orders of magnitude bigger than that. Like we know last year, JP Morgan got fined $960 million, almost $1 billion, for spoofing the price of gold. Well, why would they be willing to pay $1 billion fine? They're like, because we made 20 billion. It's like the cost of doing business. Awesome. We're just going to keep spoofing because you're not going to stop us by charging us, 5%. And so it's a long-winded way of saying Larry Fink was doing what he and everyone in financial services had to do.
A spot Bitcoin ETF is designed to track the value of Bitcoin directly, requiring the asset to be held in custody. This ETF can be traded on traditional stock exchanges. While a Bitcoin ETF based on Bitcoin futures received a warm welcome earlier this year, the spot ETF, tied to the current cryptocurrency price, is considered a holy grail for the industry. Despite the SEC's historical resistance to approving such ETFs, BlackRock's application is now officially on the SEC's calendar, leading to a 21-day public comment period once published in the Federal Register. Additionally, 4 other applications related to the CBOE BZX exchange, including the Wise Origin Bitcoin Trust, Wisdom Tree Bitcoin Trust, VanEck Bitcoin Trust, and Invesco Galaxy Bitcoin ETF, are also entering a 3-week comment period. Mark Yusko shares his perspective on the Bitcoin ETF and why he favors BlackRock as the potential winner in this matter.
I've said for a long time, like over a year ago on this show, that none of these ETFs were going to get approved. And look, I have money. I'm invested in Bitwise. I'm invested in Amun. I'm rooting for 21 shares. I'm rooting for Bitwise.
to get a spot ETF.
Yeah, to get a spot ETF. And I was like, none of them are going to get approved. The only one that will get approved is BlackRock. And people are like, oh, that's ridiculous. Here we are. And now everybody's saying, oh, but they're not first in line. I don't care. They are going to be the ones that get approved. And if that means they have to disapprove 21 shares, even though it's the same application, basically, it's not exactly the same. I think, again, I'm entitled to my personal opinion. I think they're going to do it. And, others are saying, well, they have to approve 21 shares if they want to approve BlackRock. No, they don't. They don't. Technically, they're first in the queue, but they can do what they always have done, is just let it expire and then approve the next one. So we'll see what happens. But I'm still sticking with BlackRock will get approved. They will take the market share. And why is that important? Well, it's important because if you believe, as I do, that everything of the last 2 years was not an accident, that it was an intentional set of acts to disrupt the disruptors. As I said, we're in phase 3. Phase 1, the Gandhi quote, first they ignored it. 2009 to 15, no one cared about crypto. No one cared in Washington, D.C. No one cared in New York City. No one cared. No. I mean, Jamie might have heard it from his daughter. Hey, Dad, this stuff's cool. He's like, whatever, go away. And it's a bunch of nerds and geeks playing with their magic internet money. Bitcoin is, I believe, in crypto summer, right? I think crypto summer started June 15th. Now, how bizarre. And I don't think anyone was paying attention to me. So that's not my point, but I thought it was bizarre. A few months ago, I said June 15th was the equinox. That's the day that BlackRock announces their ETF. I mean, that's just total happenstance. Again, I had nothing to do with it. But I just thought it was total. And that is literally the low in this, because there was a correction that was going on after the big rally from November. And that was the low. And so now we're in this, and summer is not parabolic, right? That's fall. So they're the 4 seasons.
Grind higher. You think
fall.
Grind higher.
Yeah. And so we grind higher. So we have higher lows and higher highs. And we head towards fair value. We've had Tim Peterson on the show, and Tim's awesome. And he has this Metcalfe's Law model. And, at the trough in the bear market, last year, the fair value of Bitcoin got pretty low. It got down into the mid 20s. Today, same model saying we're back in the 50s. And so I think we grind toward 50 by the halving, then we go parabolic. But the caveat is there's not as much leverage this time. So I don't, last time the fair value was 20, we got to 60, 3 times. That probably isn't going to happen this time. This time, if fair value is 50, could we get 3 times above that? I don't think so. Could we get 2 times? Sure, for sure. And then you drop back to fair value and probably go below fair value in the next crypto winter. But here's the thing that I think is interesting. If you look at all the halvings, we basically 10x, and this fits the Metcalfe's law curve. We basically 10x the total market cap. Basically, we add a 0. So from 100 to 1,000, 1,000 to 10,000. This will be 100,000, and then the next one in 2028 is 1 million. And that's just stupid. How can you even say that? I'm like, well, it's just math.
Some of the most prominent names on Wall Street are submitting or resubmitting applications to the U.S. Securities and Exchange Commission in a race to be the first to offer a Bitcoin ETF product. The Bitcoin ETF would enable investors to gain direct exposure to the cryptocurrency by purchasing shares through their brokerage, similar to buying stocks. Europe's first Bitcoin exchange-traded fund is expected to go public this month, a year after its initial planned launch. Jacoby Asset Management, which had postponed the launch last year due to market conditions, now sees a shift in demand since the crypto crash and FTX exchange collapse. Jacoby emphasizes that its ETF is distinct from an exchange-traded note, as it offers no leverage or derivatives, reducing counterparty risks. Regarding the prediction made by Mark Yusko, it remains to be seen whether BlackRock will be the first to obtain the ETFs. The comments section below awaits your thoughts on this matter. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.